name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. We're going to take a look at the markets, but before we do that, as always, I need to stress that trading financial markets unfortunately is risky. There's a general risk that we'll lose all of our invested money. As well, I'm going to share with you guys my outlook on the markets and what I think is going to happen. I'm also going to talk a little bit what I think other people are going to be doing. So I'm going to tell you where I think traders are going to be buying, where I think they're going to be selling, and stop loss orders, take profit orders, and things like that. But this does not constitute trading advice. Rather, it's made with an educational purpose. For more on this, click on the risk disclosure statement at the very bottom of this presentation or on the actual very homepage. So let's begin, and we're gonna begin with the euro versus the USD. So the euro is moving to the upside, and unfortunately, it pierced above the trend-defining level today. And there's other pairs as well that turned bullish in the last few days. It's the Aussie dollar is one good example of that. And as you know, the pound dollar as well is shrinking sideways. So if it just takes out last week's high, then that as well is going to turn bullish. In fact, I published an article in the technical analysis section on Friday last week. And I said that the dollar index is close to ending its bullish trend. Watch the May 4th low. Here's the dollar index, and here you can see how the market is trading below 92, or is very close to trading below the May 4th low, which is the 92.38 level. And if we take that level out, as you can see on this daily chart, I think the market could potentially move down to the first Fibonacci levels here. And the ideal entry for a long position would be around 91.36, 90.86 down here. So a bit of a correction in the dollar, but because it's a contrarian move, so it's not a trend following move, it's a contrarian move. This is probably going to be choppy and probably going to go down and all the way up and then all the way down. So it's going to be a bit of a difficult situation over the next week or two. But I think at the end, probably the dollar gives up some of its gains. So with that in mind, the euro most likely is now short-term bullish. It traded above the high. I'm going to treat the trend as bullish above the low here from um, last week, and that is the 118.22 level. So I'll have that as my trend defining level. And here, if you look at it from a big picture perspective, you have the fib from the high in April. Fib from that high to the current low gives you these three levels, and you have the low here. So maybe a 50% correction or something like that. You have another high here as well. This one here, which is, let me see. It's the 2141 level, and I suspect the market could maybe head up to these levels. Now, because again it's a contrary move, the risk reward ratios that we're looking for are not there. I think if we go long right now, we get definitely a little bit more than our risk, but make 130 pip, risk 160. So it's actually we don't even get back the return that we're looking for. So it's not ideal entries here. But I mean, if we're patient, maybe the market is going to pull back a bit. This is about 50% correction of the run we just saw here. And then maybe we could potentially target 2050 and 21. So here the risk would be about 85 pip, move up to the high 143, go all the way up to 121. That's 200. So that's some solid risk reward ratios there. So I'm looking for this to head to the upside now, so we're now not bearish any longer. But it's not going to be easy, and we could easily tomorrow or even today be trading back at 119, and I suspect around 119 traders going to be buying, maybe with stops below 118 at 22. Here's the price of Bitcoin, and Bitcoin turned bearish last week, right? The market traded below support, and there's not too much to do about this. If you look at it from a daily perspective, the market is most likely going to continue to consolidate between the March low and the May high. And I was bullish. I was even long myself here for quite some time. I was long here, then I switched out my position to an IOTA, and I was up with about 20% on that IOTA position, but the end of market turnaround, and totally across positions in IOTA, Litecoin, and Ethereum Classic, I lost about 6% of the crypto portfolio. But I'm happy to get out of it. You know, it's always nice to not be, it's not nice to be in a bad position. So many times when I'm in a bad position, it's just, I just want to get stopped out so I can clear my mind and focus on something else. Now, what's important here is just to keep the powder dry. I think this market will continue to move to the downside. If we go all the way down to 7,443, that would not surprise me. As well, if we consolidate, that would not surprise me either. But I'm gonna be waiting, give this a week or two, if not longer. I think we're gonna trade sideways between the March low and the May high, and then eventually we'll have a nice breakout. Here's the price of crude oil. And last week, let me see if I can get this working. Last week I said, look to potentially buy at pretty much the first fib. But I'm making adjustments to that outlook because if you look at crude oil, so UK oil, you can see here that crude oil is still trading above its high. And crude oil is actually the main um beneficiary of the situation with Israel, US, and Iran. Okay, those are sort of the big. This market is what tends to lead. Is the global benchmark. It's not West Texas. What it is the big benchmark. Now, if you look at this market, now we're still at close to the highs, and it does make zero sense to buy Brent crude up here at these highs. So with that in mind, where would I rather buy? I'm probably around these highs. So probably here, I think traders are going to be more interested to go along. So if this needs to go down here first for people to buy it, well, that tells me that US crude or Brent crude oil could potentially also go down to much deeper levels. So 69.22, that's the third fib of the Fibonacci's from the lows, derived from the low from this level here at 67.61 all the way to the high. And I really want to, if I want going to buy, I'm probably going to be buying down here. If I'm totally wrong, Brent crude just trades sideways. Crude oil as well here trades sideways. Took out the high, we just target higher levels. Here is gold. Now, with as I showed you, the dollar index potentially turning lower, the euro this morning ending its downtrend, the Aussie dollar as well ending its downtrend, Canadian dollar as well is already um, trending to the benefit of the CAD. You only have like the New Zealand dollar and the pound dollar, and sort of the dollar yen, where the dollar still has a bit of command. Um, So with things turning now for the dollar, I suspect gold can head to the upside. So that's why we said last week that if we took out the May high, we could probably head to the April 24th high. So the market took out this level, went up, went up, and now down again. And I suspect as long as trade above 1,310, that this market will continue to head to the upside. I'll potentially hit that April 24th high of 1,332. Here's the DAX. There's not too much happening in the DAX. We need to have a bit of a pullback. If you want to trade stock markets, take a look at the Dow Jones, the Nasdaq, or the S&P. We had some nice breakouts to those levels, and I didn't buy on the back of myself all those levels, but I'm sure I share with you guys here a few weeks ago on my outlook for the S&P. I'm not sure I can actually search. Let me see here. Yeah, I don't think I'm gonna find it. It doesn't allow me to search for with the yen sign. Yep, it's not gonna work. Yeah, I'm not gonna find that unfortunately right now. Um, It was quite a long time I did an update on that. All right, so that's it for today's episode of 600 Seconds of Trading. Just gonna see if we have any quick questions in the chat box. No, we don't. So guys, thanks so much for joining me. If you like the video presentation, don't forget to hit the like button. It's very straightforward. You click up here like that, and then you hit that like button. Very straightforward. Click on it, and then that's it. So you know as well, unfortunately, we are running short, or not running short, we're running short of people today. I'm officially not working today because I have some things I need to do. I'm moving homes and working with that. And Nathan as well, he is away today, and Debarati as well. So there's gonna be less publications than the usual, but Yuri should be online in the next hour or so, and he's gonna be sharing some more technical analysis in the technical analysis section. But there's not gonna be too much content here today, and unfortunately as well, Nathan's webinar, which was supposed to take place tomorrow, fortunately to delay that 1 week to the 22nd. On the 22nd, we'll host that webinar instead of tomorrow. But if you did sign up to his presentation, then you're gonna get a notification from the marketing team at Trade Captain and Amana Capital about the webinar being postponed. Okay, guys, have a great day and happy trading. If you are doing anything, I think stock market's probably the best, and as well, I think maybe gold or something like that that would play on correction in the dollar. You just need to be careful because the risks are always elevated when you trade against the trend. It's different when you trade with the trend. That's very straightforward. As But trading against the trend, which most people do, is usually a good recipe for disaster. So you need to be much more careful. Okay, guys, thanks so much for watching. I'll be back tomorrow as usual at 9 a.m. London time. And until then, happy trading.